Welcome everyone to episode 2 of the NordSearch podcast, where we speak to energy trading leaders who are focused especially on the power markets. I'm delighted to say today I'm joined by Edoardo Simioni, who is head of short-term power at Ørsted. So Edoardo, welcome. Thanks for your time.
Thanks for having me, Patrick. And just to clarify that, it's short-term trading optimization. I wouldn't like to steal the job from my colleague, who's actually the head of short-term trading. So, but yeah, thanks for having me.
Yeah, no, I'll make sure that's noted on the title that comes out. But yeah, obviously, look, thanks for your time. We were obviously speaking a couple of weeks ago, had a really interesting conversation about what's going on in the intraday markets, and thought it'd be useful and interesting to go on a podcast.
Excited to have this conversation. Let's see where it takes us.
Absolutely. So, if you don't mind, Edoardo, if we could start off with you just giving for people who don't know an introduction to yourself and your background and what you're responsible for at Ørsted. That would be great.
Sure. So, as I said before, I'm heading a department in Ørsted called Short-Term Trading Optimization, which is basically a quant department, you can say, that is supporting, as in the name, short-term trading in European power markets. I'm originally Italian, and I moved to Denmark in far away 2014. So we're approximating the decade, which is quite a while. And I'm based out of Copenhagen. And I joined Ørsted in 2016, straight out of university. I studied at the Danish Technical University engineering, but then kind of specialized a lot more into data science and programming related things. And then, as I said, straight out of uni, I got lucky enough to land a job at Ørsted at the time as a forecasting analyst. Then moved a bit internally and landed this awesome job that I have since 2019, managing a department composed of 2 sub-teams, essentially doing the same job for one for the Danish based trading floor and one for a smaller Irish based trading floor. So that's the very quick version of the background. I'm very happy to expand in any direction you'd like to go.
Yeah, it'd be really interesting to understand like how like when short-term trading works at Ørsted.
Maybe we can start for actually saying 2 words about the company itself. So
yes.
for those of your listeners that may not know, so Ørsted is known for being the world leader in offshore wind. But we actually essentially have a broader vision than that. We build, own, operate, and trade and manage the risk from renewable assets around the world. Obviously, the majority of those are offshore wind, but we also have investments in onshore solar, wind, and energy storage. By far, the bulk of our portfolio today is located in the UK, where we have around 5-6 gigawatts of offshore wind, and then followed by Germany, Netherlands, and other European markets. And we recently completed construction in our first Taiwan-based offshore wind asset, expanding quite a lot onshore in the US, with also some ambitious offshore projects. You might have heard the news; those are not going exactly as we would hope. We had to take some quite bad write-downs on those offshore wind projects in the US, but we are confident that sort of our ambitions in the area will be realized eventually. And
for anyone that followed the news, like what was the reason for that?
Yeah, so we had quite an ambitious investment agenda in the US East Coast offshore wind projects. We especially put a lot of resources and effort into our Ocean Wind 1, which is, I believe, off the coast of New Jersey. But unfortunately, due to some quite crazy supply chain delays, specifically in some vessel supplier, there's a little bit of complication in the US markets, because when you want to operate there with ships, there's a very old law from the US. I think it's from like the early 1900s or late 1800s, which is called the Jones Act. Right. Which requires that the sort of US vessels that operate out of US ports have to be manufactured in the US. And I'm not a legal expert, so I actually might get this wrong, but this is the gist, let's say.
Okay.
And that actually caused the fact that the whole offshore wind industry on the East Coast was relying on one vessel manufacturer. And this company is quite a bit delayed for several years in building and making the vessel available, and that has caused massive delays on the project that unfortunately have ruined the business case. And you add to that much higher cost of capital through increases in long-term interest rates, and that you just have plus other general supply chain problems, and the fact that you don't really have an industry yet in the US. It's a nascent business. Then you have the perfect storm, and that unfortunately has caused us to have to get out of the projects. That's the announcement that came out a couple of days ago on the 31st of October, where we decided we're not going to build Ocean Wind 1 and Ocean Wind 2, which were combined more than 2 gigawatts of offshore wind capacity. But in the past few days, you've also heard some of the other developers, you could say our competitors, taking similar decisions and having to recognize write-downs on their balance sheets for essentially the same problems. So these are, you could say, they're growing pains for a market that is really trying to get started. We have taken final investment decision on one 700 megawatts project in the east coast of the US, and we still have two quite large projects that we are continuing to develop. So we're confident that that's going to work out. But of course, it is a crazy, challenging environment. You have really the perfect storm. You have supply chain delays. You have a very weak sort of market because it's new, and then you have high cost of capitals, and so that's a quite a challenging situation, of course.
Yeah, absolutely. But look, if you're going to drive the energy trading transition or the energy transition, it's not going to come without its challenges, right? Otherwise, we'd be already doing it, and it'd be easy.
Yeah, and I strongly believe that sort of someone has to take that risk, and we have always been the leaders in the offshore wind market, and so we took the risk to be first movers also in the US. We actually did exactly the same in Taiwan, and in Taiwan we now have turbines spinning and more than 2 gigawatts in operation, or I think it's 1 gigawatt in operation and 1 gigawatt in construction. But anyway, two very large projects over there, and there it worked out actually wonderfully. So you have to take these risks as trying to be pushing the envelope and trying to create a world that runs entirely on green energy, which is our ultimate vision for here at Ørsted. Maybe I forgot to mention Ørsted is a Danish company originally. Used to be called Danish Oil and Natural Gas, DONG, but then transitioned quite dramatically out of fossil fuels and into renewables. And that culminated in 2016 with also changing the name into Ørsted and a quite ambitious expansion worldwide. And not a lot of people know, but Ørsted also has a trading arm, a little bit like, for example, Equinor has with Danske Commodities. Your listeners might be familiar with that. So we have a triple-digit people organization that is handling the power and gas exposure of the company using the traded markets.
Yeah. So is that asset-backed trading that you guys focus on?
I would say primarily yes.
Yeah.
We're definitely focused in managing the risk for our assets, but we do also proprietary trading, but definitely the focus is on the assets.
Awesome. So could you also just give us a quick overview of like your team's responsibilities and what you're focusing on?
So as I said, the name of the team is Short-Term Trading Optimization, and I think that helps a bit to understand what we're doing. So we're helping out our short-term trading desk to essentially make better decisions when they trade in the markets. Intraday markets or short-term markets in Europe are defined as day ahead. So all the bidding that happens in the day ahead auctions, of which there are several opportunities there, and then also intraday. So then during the day itself, and as you probably know, these are 24/7 markets that are operating also 365 days a year. We have a trading team, a trading roster of traders that are always present, monitoring the systems and trading year round. And my team helps them make better decisions when they sit there in front of the markets. We also write and manage the algorithmic trading strategies that we have that help us manage the risk in our portfolio, balance the wind, balance renewables in general. And then, as I said, also some proprietary trading on the side. So my team, for example, there is responsible for generating the signals to help us understand, hopefully take an educated guess in the market direction, for example. In addition to that, we're also responsible for the quality of the weather and production forecasts that we use in-house. as I said, in the UK, we trade around 6 gigawatts of wind. So as you can imagine, the weather forecast is quite an important part of what we do when we try to stay balanced or to balance out such a large portfolio of wind. So there we have relationship with several suppliers, and we also do a lot in-house in trying to improve the quality of our predictions.
Yeah. So is it fair to say your team has a strong focus on like automation and like running, like you said, algorithmically?
Yeah, it's essentially a bunch of nerds, if you want, that are writing code for a living. So we will develop anything from sort of prediction models that help us make better, predict better the wind, lower our risk, lower our balancing costs, but also predict price directions, and also the algorithmic trading strategies that execute automatically these trades in the market. We have an interesting setup right now where half of our portfolio is handled today by a strategy we built in-house, almost sort of completely built in-house, except for the API towards the exchange. And then also a part of our portfolio is managed by a third-party solution of one of the established vendors that your listeners might be familiar with. And we are able to shift volume between the two, and also using A/B testing and some of these interesting strategies. So it's quite an interesting world to work within, I would say.
Yeah, absolutely. And it seems to be like every trading organization that are focused on the power markets are looking at automation as one of the top things that they want to improve in their business. Well, what's the reason that it's becoming such a big, big priority?
I think it's, if you're trading renewables and you're balancing renewables in intraday markets, I believe it's almost a must-have, especially if you have a large portfolio. I mean, just think about, for example, the setup we're responsible for. We're trading primarily in 3 regions: UK, and then Germany and the Netherlands. Of course, there's interconnected trading towards other areas, but this is where our assets are located, so where most of the attention is. So if you think about it, you have hourly and quarter hourly products for the continental markets. So that's 96 quarter hourly products and 24 hourly products times 2 markets. You make the math. And then you add to that the UK, where you have half hourly. Well, in the hours, you don't have a lot of liquidity, so let's skip that. But then you have 2-hour products, 4-hour products, 8 hours, and so on. So combine all of that together, you have what? Several hundreds, well, probably close to 500 options or kind of different products you have to monitor. And all of this while having a position that actually changes over time, because your position is based on a prediction of what production will look like. And that will update together with the weather models. It will update as you get more and more live production information. And so I just think it's impossible for humans to keep all of that information in their head at the same time, or at least it's not very scalable, right? So the only way to do everything completely manually for a large portfolio in multiple markets would be to have an army of short-term traders, and so of course that's not very scalable. So I strongly believe that having algorithmic trading systems that you can trust to at least manage a portion of that variability, making sure that they trade yourself into balance or whatever type of tilt the trader would decide to give, and help execute in a smart way. For example, breaking out big positions into smaller chunks, trying to be clever about when to place the orders, when to cross the spreads, how to place them, what the pricing is, and doing all of this in parallel at the same time. I think I really don't see how you can do it. If you want to trade in the intraday markets and you want to trade renewables, I wouldn't know how to do it without a decent amount of automation, at least.
No, I agree. Like you said, you need an army, 365, and every 15 minutes looking at the market. Yeah, it shows why it's so important for businesses focused on short-term power intraday, like you say.
And in addition, also you have the fact that algos, they don't need to do bio breaks, they don't need to go for lunch, they don't fall asleep, they don't look at the news. They're always looking, and you can have algos reacting, in the milliseconds to things that are happening on the markets. So so that's another advantage, of course. But I really believe that the combination of humans and robots is where the present and the future is. There are things that the robots are really good at doing that humans absolutely suck at, but it's also the other way around. It's very hard to get automation systems to do some of the things that humans are quite good at doing. So I believe in the combination.
Yeah, completely agree. And what I see, which is really interesting, is you speak to people in equities who have been using automation really effectively for 15, 20 years, and then you're still speaking to energy firms that are all OTC, all on the phones, and are still not, that they're wanting to, but they're still not automated, and it's crazy. So shows the opportunity. If you're an established team like you guys now, that's where you could probably still have an edge on the competition, I guess.
Yeah, I think it's really interesting. Obviously, the energy markets are following behind with a decade or so of lag compared to the equity markets. And I also think it's kind of funny that you still have people trading on the phones. But on the other hand, I understand why they might think that's a good idea, because it is a lot of work. It takes a lot of competencies to look into automation. So it's never really obvious, or it's not really obvious whether outsourcing or in-housing, which one is a better idea, and it really depends on the ambition level of the company and where they think the core expertise lies at the end of the day.
Yeah, which leads us on to, if you were wanting to do it, how do you do it? What options do you have, I guess?
Yeah, and I think it's also interesting because these days you're starting to see service providers that are doing essentially trading as a service, which are essentially saying, if you're a utility or a trading company, you want to focus, for example, on the forward market, we can handle the route to market on the physical side for you for a fee, so you have possibilities to outsource. But I would say, even for relatively low cost, I guess. But I would say if you want to do it in-house, which I'm obviously a fan of, because I think that's how you can get an edge, and you develop also some really, really important and interesting skills. I think you definitely need infrastructure, right? You need to be able to, for example, process a large amount of data. As I said, take the whatever 500 or more products that we talked about before. All and what is the frequency of trades? Maybe one every few seconds. If you want to be able to know where the market is going, you need to be able to process all of that data, or find someone that can help you process it. So there's an infrastructure problem, but of course there's a people and competence problem. You need to find this perfect mix of someone that is nerdy enough to understand the technical details of this stuff, but also interested enough into making money, generating P&L, and passionate about markets. And these people are actually a little bit rare, at least in my experience, and a little bit hard to find. So it's important to have a good employee value proposition to attract these talents, right?
Definitely. Like, I think someone I was speaking to recently said, you've got to find someone who's nerdy enough, or like a computer scientist with the stomach enough to be a trader and make positions, and obviously have a risk appetite that allows for that, to be good at that job. So it is a combination, isn't it, that makes it hard to find.
Yeah, and probably the only alternative would be to set up sort of incentives and systems in such a way that maybe the quants or the developers of the trading strategies don't need to have that much stomach, but they definitely need to be interested in how they can improve. They need to be hungry, right, to generate P&L or generate cost savings through what they do in the automation. And I'm actually very passionate about this, because I strongly believe that the only way you achieve this, you achieve success in this, is to have these hybrid figures where you don't know if this person is a quant or a trader or a software developer, because if you start separating the roles, yes, there is space for specialization, but I think you really risk losing the context. And I think what I'm a fan of is to see people that have a technical background, that learn a lot from traders, and they end up performing really well because not only do they have the skills technically, but they also know what they're doing. They know what they're talking about, and that helps them take good decisions.
Yeah. No, it's interesting because just yesterday I was speaking to one of the big players in this market, the head of algorithmic trading. He was saying exactly the same, that he doesn't separate the responsibilities. He wants that person who can do all of the three, so the quantitative, the trading aspects, the modeling, and he looks for people that all work together and collaborate rather than putting them in different little positions in the team.
Yeah. I think that's a modern approach. At least in my head, it's an approach where you will see less and less split between what used to be called business and IT, right? For example,
Yeah.
and you will see more and more hybrid figures. Similarly, hybrid figures between quants and traders. You might have quant traders. You might call them something else. I don't even know.
Yeah.
But then you also have the very interesting topic about the incentives and KPIs, right? So, for example, if you're a team developing algorithmic trading strategies as a team, because when you've developed software, it's almost collaborative by nature. It's very risky to have one person build a strategy by themselves, and then what happens when the person leaves, right? So for us, it's very much a team purpose or team activity. Then you also have to set up KPIs in a way that encourages collaboration. So you might not have, for example, the personal book that the trader is used to having in it might be in equities or in the old school setups, and you need to ensure that there's shared KPIs and that people are rowing in the same direction, which is also quite an interesting challenge sometimes.
Yeah, I think it's easier now though with the modern type of person you discussed. Like they are wanting to collaborate, not just doing one specific part of the job, rather than people who, I don't really see the modern thinking companies like not sharing strategies, for example, like that.
Yeah, that's another one.
It's all on team bonus, team P&L, and it fosters a better culture as well. Would you say day-to-day working environment?
Definitely a much, at least in, I would say, in most people's impression, it would be just a more pleasurable environment to work within, because you don't have this protectionism somehow that you might get in other places where, oh, I'm not going to tell you how my strategy works because otherwise you're going to copy it and it's my P&L, so I want to kind of hide it. You encourage knowledge sharing, you encourage knowledge transfer, and hopefully you raise the level on average by doing this. I think you might, obviously there are costs related to this. You might discourage the superstars because maybe they want to be sort of on a pedestal or put into the spotlight or be successful by themselves. But I think at Ørsted we actually have a model where we're happy to lose the lone wolves in order to have a successful team.
Yeah, no, I think it's definitely a really interesting approach, and there's an element of balance as well, like you say. But for you, like having gone through this process, and I guess there's many companies I speak to who are still a lot earlier on in the process. Like, what would you say are like the big challenges that you've got to think about if you want to run this properly?
Yeah, I mentioned a bit before, right? It starts from the skills of the people that you have, and there you need this hybrid that we talked about, I believe. And then it also is the infrastructure. And what I will add to that is also somehow the real actual agility in embarking in a project like that. For example, when we decided to in-house the building of the strategies for trading intraday, we started very small and we started quite quickly. In the space of a few months, we went from not having anything to having a system that was trading a small amount of volume, almost insignificant, but making actual trades. And then we ramped that up over time, every once in a while at a fixed or at a schedule, essentially. And we were learning on the go as we saw more volume being piled on. We found new challenges, found the solutions, kind of iteratively went through the development phase. And I think that's been actually quite a good process. but there are companies that sort of would have a hard time doing that because they might think more into the old school waterfall style, where you set yourself an objective, and you say, oh, it's probably going to take about 5 years, and then you start, and the world changes around you, but you have that objectives, and then you realize 5 years later that actually you built something that you don't really need today. So I think there's also an organizational challenge in how to deliver a project like that. My strong recommendation would be to start small and lean, and try to remove as many obstacles as possible, and learn really on the way, deliver result as quickly as you can in a small contained environment where pain can be small and manageable.
Yeah. So I guess what are the advantages of going in-house compared to if you were outsourcing it as well, or is there a nice balance between the two?
Yeah, I think it's obviously that you will. It's if you want to have an edge in the markets, it's really I think it's really the only way is to build on that knowledge internally and form your people and your strategies by investing in it, right? That is the strong advantage from in-housing. You actually have I would say 3 alternatives here. You have the full in-house, you have the hybrid setup where you might use a third-party solution, but where you can tweak some knobs, adjust some parameters here and there. That can work okay. And then you have the full outsourcing, right? And they all have kind of their pros and cons. Obviously, the full outsourcing is the leanest setup. You don't need a lot of people for that. You don't need a lot of systems, but it's going to cost you some money. You will lose the margin because your supplier will have to charge you a margin. And then you will learn not that much, right? Maybe nothing at all about how the markets work, and about how to trade better. You have to accept what your supplier can deliver, and of course you can tender that out on a regular basis. Then in the middle you have this kind of hybrid setup where of course you need less complexity. You have less complexity and less to manage than the full in-house solution, but you also have a little bit less control. You can only tweak some knobs, but not all of them. And I think what I would actually recommend if people are starting on this journey is actually start with the middle layer solution. Start with using some of these off-the-shelf algos that exist out there from vendors, because it allows you to experiment, see how it works, and then eventually you can actually learn from how things are working and decide for yourself whether you want to sort of do the full-blown solution and go fully in-house. But essentially what happened to us was that we grew a little bit larger than the system we were using. We felt like we needed to control more details about the strategy, and the system we had just didn't give us the option to do it, or rather the effort that we would have to put in to be able to do it was just actually larger than just starting from almost from scratch and build it ourselves. So that's eventually what we decided to do. But right now we actually still have both, and we can move volume from both solutions, which is actually also quite interesting because then you can see where a system performs better, and decide to allocate more volume in situations like that versus not, and you can learn from that, from the algos competing against each other essentially.
Yeah. So then, you've got it running like algos that are coming from vendors, and then you've your own team to work on their own strategies as well.
That's correct. So today, half of our UK portfolio, for example, is traded by our in-house algo, and the other half is traded by a third-party vendor. And both algos are managed through the same interface by traders that are sitting on the desk. And traders, of course, have the option to stop them, to start them, to shift the position, to take positions on top or instead of the algorithms.
Cool. So what time kind of set up from your side from the beginning when you first went with an outsourced vendor did you need, compared to then when you got to a point where you wanted to do it yourself? What did you then need to have in place to make that happen?
So I think when we started, it was roughly 2017, 2018, something like that. And as I said, we went with one of the few vendors that were available actually back then. I think I recall 2 or 3, and not that many more that were selling intraday automation systems. of course, we had to set up kind of the installation of the system itself, and then you hook it up with your ETRM on one side, and on the other side with the input data that you need. For us, it was a lot about production forecasts, as you can imagine. And then you're almost up and running. What you then realize quite quickly you need is that if you want to find out whether this thing is doing better or worse than before, you need to start looking at the data that it produces. So every single trade that it makes, start to analyze that, which you can do either through your ETRM or through the backend of the system itself. And that's actually what we started from. So just analyzing the behavior of the system, finding out when it was working well, when it was not, tweaking it iteratively over time to try to get it better and better. And then at some point we reached the ceiling where we saw, okay, there's not much more that we can do, but we know if we had full control, this is what we would do. So that was then the time where we evaluated whether there was a solution that allowed us to have more control. And in that case, we had to establish basically make sure that we had the infrastructure on which to run. So we're running on the cloud, and that has some complexity to be set up as well, of course. And then build the software and then deploy it on that cloud infrastructure, and then we were up and running. The additional thing you need, I think, in order to develop the strategy when you build it yourself is actually a crap ton of data, I would say. Because, for example, if you want to have a reasonable backtesting framework where you can try to see how your strategy would have performed before you release it in the market, then you need to store actually order book level data. So, for example, the history of all the changes in the best bid and ask prices for each of the products, and that is really a lot of data that you need to have the capability to store and to extract relatively efficiently. So we had to invest some resources in our data infrastructure as well.
So how many people headcount wise would you say you needed, and what types of people would you say? Because that's a question that I got asked this morning actually.
So the team itself here in Denmark, the Danish-based team is 8 people in total, 8 quants.
Yeah.
And as I said, we have 3 sitting in Cork, in Ireland, and probably roughly half of that team is fully dedicated to the strategy development and the strategy work. But we have the support of a large IT organization, where, for example, we have a team of 4 data engineers that are responsible for the data infrastructure. We have a team of I don't even know how many they are, but a team of IT resources that are supporting the cloud infrastructure. They're not only supporting what we do, they're supporting whatever sort of what all the other trading teams are working on, including, for example, our ETRM system. So we have a machine that it was already running, that we just added a few resources on top of. So that's the luxury that we have here at Ørsted, given that the size of the company is relatively large. But I would say if you were starting from scratch, a couple of maybe you only need one or 2 data engineers and 1 or 2 IT resources that are helping you out on the cloud, and then with a couple of quants you could probably get started. The question is how quickly you want to scale, and how quickly do you want to add strategies and make further developments.
So unless you've got the advantage of Ørsted, which was a pretty established ETRM team, IT infrastructure team, it would be quite challenging without that kind of infrastructure in place. So
I would say so.
It would make sense to then go outsource it.
But that's also why I would recommend to start as small as you can, right? With a minimum viable product. So maybe you can start to outsource it, or have the middle ground solution where we have an off-the-shelf system, so you then don't have to worry about building everything from scratch. Hopefully the system gets up and running quite quickly, and then you can start over time adding resources that first understand or help you manage the system and improve it over time. Then eventually, if you figure out that's what you want to do and that's what you want to invest, then you can shift towards more in-house. But yeah, it is challenging, but I also believe that you shouldn't sort of overestimate, just start small, right? And you can always change your mind. I think, I can't remember who it is. I think someone like, it's probably Ray Dalio that says you should have strong opinions but weakly held, right? So start convinced that you're doing the right thing, but be ready to change your mind if you find yourself that, you know, reality looks different than what you imagined.
Yeah, I think that's good advice for most things in life, other than trying to build algorithmic trading teams. I think it's pretty solid.
Definitely. Yeah, and it is really about not overbuilding it, not overcomplicating it. Just start working on something, but then be quite extremely sort of tough with the decisions you're taking. Is this actually working? Are we going somewhere? Is it doing better than what we thought before? And if not, maybe we should kill it and pivot on something else.
Yeah, and in terms of expectations of how quickly you can get started and be operational and really profitable, like, if you were to give, like, if someone was asking you that question, what would you say to that?
So obviously it depends on how many resources you put into it, right? But I don't think the problem is fully scalable. Meaning, if you throw 20 developers or 20 quants at the problem, you're not going to solve it, you know, twice as fast as if you have 10. There's diminishing returns there, so it's going to take some time. I can tell you roughly how it worked out for us. I think it took us about half a year of development to go from nothing to something that was trading. Roughly 6 months with 2 or 3 FTEs, 2 or 3 employees working on the task. And then it took us about 9 months, I would say, to go from trading a very small proportion on proportion of the portfolio to now half, and with the potential to go to 100% if we want. And that time was really needed because we first would stay at a given percentage of the portfolio for some time, get some data, get some learnings. Then we would implement the changes that we thought was necessary to get the extra performance, scale up, accumulate more data, implement some more changes, and repeat, essentially. So that took a little bit of time. So in total, you could say we've been at this for a bit more than a year and a half. And now I think we are sort of full scale, or able to go full scale. I don't know if you would call that super fast, but it's definitely not too slow, I would say, at least not in my opinion. So
I've heard 12 months, like 12 months. If you want to get set up from ground zero and do it yourself, you've got to be patient. You've got to be willing to have 12 months. That's what a few other people in my network have said.
But really, I think you can be fast if you're not overly ambitious. I don't think one should start with. I don't think one should start with building the perfect position closer and the best system you've ever found. Maybe you should just start with a very simple algorithm that, I don't know, just monitors the market and takes a trade and makes a trade when some conditions are met. Just find a minimum viable product that does not move a lot of money, but that can prove that you can achieve something technically and that you can make some money out of it, right? And then just move on from there. And I think if you did what I just described, then I think it's reasonable to expect you can have something up and running even faster than a year.
Yeah, because what I have seen is people that have probably had too bigger expectations and not been patient enough to see the results. And I've seen teams being killed in like 6 months because they were maybe higher up were expecting bigger and faster results. But I guess you just got to have a clear standard at the start.
I think you got to set the bar low enough to be realistic. But having some results in 6 months, I don't think is unreasonable. You just will not have the sort of gold-plated perfect solution, right? But I think it is achievable to have any algo. And then the thing is also, obviously, the faster you want to be, the more you need to outsource. Is it possible to get set up in less than 6 months if you take for example, third-party systems? For sure. Probably even less than that, right? But if you want to build the thing in-house, then it's going to take longer for sure.
Yeah. Well, look, thanks for sharing that journey that you've been on with Ørsted and all the insights. I I think that's super valuable for a lot of people that are perhaps not as far ahead, or people that are doing the same as you and just interested to compare and contrast, really. But yeah, some really great stuff there, Edoardo. Appreciate
Thanks.
that.
It was fun, and the journey itself was also fun. But yeah, I mean, I always brag a bit with my friends, saying that what's more fun than the intersection of digital and energy,
Yeah.
and with a little bit of trading sparkle in there, right? So it's just a fun world.
Yeah, exactly. That's why most people I speak to are really passionate about it. Not because it's challenging, because of the technology that you get to work with, and the opportunity, and added to the purpose that you have.
That's right.
Helping the energy trading, energy transition, which is probably the biggest thing to be working on right now.
Yeah, and the biggest challenge humankind has ever faced, most likely.
Yeah, absolutely. Yeah, so look, great. Thanks for your time, Edoardo. And yeah, this video will be out in very soon, and hopefully everyone enjoys it. So thanks again.
Thank you so much. It was a pleasure.